talk about that Tesla note with Renita Young joining us from the TD Ameritrade newsroom in Chicago, our senior markets correspondent. So this is now a few notes that have turned a little bit cautious here on Tesla lately, or at least are not calling for huge upside from here, Renita.
Not a huge upside, and just as Kevin said, it's a result of these analysts playing catch up with where the stocks are right now. However, there is not room, or not upside room risk, more so what this analyst is saying. So Goldman Sachs downgraded Tesla, and they took this stock to a neutral from a buy with a price target of $248. That is higher than the previous one of $185, but it is below the Friday close of $253.18. And Goldman Sachs says after this stock has rallied around 108% year to date, it is beating the market, of course, and the market is giving Tesla more credit for its long-term opportunities. The firm does understand the difficult pricing environment that new vehicles are facing right now. We've seen that happen, and that's a lot of the reason why we've seen these companies lower their vehicle prices. Hey, I saw evidence of it over the weekend, Oliver, while I was looking for a car. So I didn't just look for used cars, I looked for new, and I'm almost at a parity right now where I could get what I want for the price of a new vehicle, and that's the real world example of what could be happening right now. But Goldman Sachs also says that the trend in lower new vehicle pricing and the softening of the auto supply and demand for the industry, that's going to be a headwind for Tesla moving forward. However, Goldman Sachs does believe that Tesla is well positioned to maintain a strong position in the EV space. Oliver, I wonder if that has anything to do with Tesla now selling its charging to Ford and GM, and any others may come along. I'll be digging to see if analysts have estimated what kind of impact that would make on Tesla's business.
Yeah, the fact that they've had to bring their price targets so far up, and then also say that it's no longer a buy. It's kind of one of those again where we have to take it a little bit, I think, with the grain of salt, but still, when it's Goldman, people pay attention to it. And the fact that they're realizing that there are still some, proving that needs to happen to justify the rally is kind of interesting, and it obviously not exactly helping with stocks flailing the last couple days. Also not the only somewhat negative note. Again, these aren't really negative notes, but another one here this morning is kind of similar in that they're no longer saying that Alphabet's a buy. Take me through this one.
Yes, well, Alphabet right now is seeing a downgrade at UBS. The analyst took the stock to a neutral from a buy, and the price target is at $132 now. That's up from $123 and very close to Friday's close of $122.34. Now, near term, this analyst says they see a monetization risk and limited upside to the consensus estimates we've seen come out over the past couple of months. But the company says that not only is that a limited upside to the consensus estimates, but it's difficult to see this current high single-digit sites growth estimate that UBS currently has, and that Alphabet does face medium-term a revenue risk, and that would be due to this new search using generative AI. It's now displacing the ad inventory. So that's something that the company has been trying to augment a lot over the past couple of years. It's ad as companies close down or pare down their expenses with ad spending. But the analyst is talking about they may take time to optimize the AI sector of this business. Now, UBS also says that the operating margin for Alphabet, that expansion from cost cuts that the company has been making to become more efficient, that could actually be offset by the investment in generative AI. And not just this, the final nail in the coffin was UBS sees a better risk-reward skew in Amazon and Meta. So not the most positive, not exactly the most negative, right? So right in the middle.
Yeah, we're kind of getting this theme from these notes lately. People don't want to get short. They don't want to be too negative, but they also seemingly these analysts need to feel the need to discuss how far the stocks have come, and that maybe they need something fresh and new news flow-wise to keep them going higher. So a little bit of cautious tone, not necessarily negative, but cautious. Thanks, Renita. Important notes out this morning. All right, Tesla and Alphabet with a little bit of a faded optimism from a couple analysts.